The latest property market data sure has stirred up a lot of controversy. On the one hand, you've got the property bears, the doomsday folk, saying beware the false dawn and this latest data is just a dead cat bounce. Then on the other side, you've got people saying this is the start of the next property boom and you need to get in right now. But what if both sides are wrong? Well, in today's episode, I want to look at what the latest property market data is and what it actually means for you going forward. Hi, it's Nero here, and let's have a look at the latest CoreLogic data. And what we can see here is Sydney, for all dwellings for the last 12 months, prices have dropped 13.4%. But last month, they rose 0.3%. And this is what's causing all the controversy. But what is it that's causing Sydney's property prices to rise, albeit quite slightly? Are they rising everywhere in Sydney? No, not at all. Have a look at this. Sydney's premium homes bounced back 4%. House prices in some of Sydney's more expensive suburbs climbed as much as 4% in the past 3 months, boosted by scarce supply and increasing demand from buyers looking to take advantage of the sharp decline in values since interest rates started rising in May. The rebound comes as the top quartile of the market by value posted a 0.7% rise in February, helping lift Sydney's median by 0.3% during the month, data from CoreLogic shows. So again, what that's showing is that a segment of the Sydney property market is starting to rise. It's not rising everywhere, and that's something you really want to pay attention to, especially as we keep going through the data. When we look at Melbourne's property data, prices for the year have dropped 9.6% year on year, but last month only 0.4%. Brisbane also only dropped 0.4%. Adelaide dropped 0.2%. Perth dropped 0.1%. Essentially, these areas have barely changed. And when you look at the capital city aggregate, so the 5 biggest capital cities, and aggregate the data, essentially property prices dropped 0%. So it's definitely clear by looking at this data for February that the property slump is slowing. But this isn't new, it's actually been slowing for a little while. Here's an article from back in January which says, property price slump slows from record speed. The record-breaking rate of house price declines has finally eased, with values slipping by just 0.7% across the combined capital cities in the December quarter as buyers adjust to higher interest rates. So why is the rate of decline in the Australian property market slowing down, certain pockets of the market actually starting to even rise when interest rates are still rising? Well, let's have a look at what CoreLogic have to say. CoreLogic's Home Value Index, HVI, recorded a sharp reduction in the rate of decline through February. The national index declined 0.14% over the month, the smallest monthly fall since May of 2022, which was 0.13% when rate hikes commenced. A 0.3% rise in Sydney dwelling values was the most significant driver of the national deceleration. However, the loss of downwards momentum was broad-based. Darwin at 0.3% was the only capital city to record a steeper monthly fall in February, albeit from relatively flat conditions previously. Every capital city except Hobart, which dropped 1.4%, saw housing values fall by less than 0.5% over the month. CoreLogic's research director, Tim Lawless, said the stabilization in housing values over the month coincides with consistently low advertised supply levels and a rise in auction clearance rates. The past 4 weeks have seen the flow of new capital cities listings 17% lower than a year ago and 11.9% below the previous 5-year average, Mr. Lawless said. This trend towards a below-average flow of new listings has been evident since September last year, coinciding with a loss of momentum in the rate of value decline. So yes, the rate of which property prices are declining is slowing. Some pockets are starting to rise. Does this mean now that we're at the start of the next property boom? Should you now just go out and buy anything? Or is this a false dawn, as some of the property bears are saying, and are people about to be suckered in like lambs to the slaughter, and then property prices crash again? Well, let's have a look at where I think the property market is placed based on now my 21 years of investing experience and having experienced this time in the cycle multiple times throughout the last 21 years. So here we have a chart that plots time versus dollars, or the property prices, okay? And what we saw is that from late 2020, property prices just kind of went up almost vertically, okay? Then in early part of 2022, they sort of went flat a bit, and then we've seen them retrace, okay? Now we're sort of in this phase here, okay? Where property prices are bottoming out. Now, does that mean that they're going to immediately go straight back up? Does it mean that this is a temporary pause before property prices start to fall? Well, to answer that question, what you really need to look at are the competing forces. And as CoreLogic said, the competing forces are on one side, yes, you've got uncertainty around interest rate movements, okay? Everyone's got a different opinion about what interest rates are going to do, but there is uncertainty. On the other side, you've got lowering supply, okay? Demand being higher than supply, not enough properties, and that's really putting a floor under property prices, okay? And so what you're going to see is these two sides of the equation, these two forces competing against each other, holding property prices roughly steady on a national median price level. Now, notice I said national median price level. You are going to see some areas start to rise in value. As we saw, the premium end of Sydney is definitely doing that. I think that's now going to continue. But then some other markets are still going to struggle. But when you combine everything together, which is what CoreLogic often reports on from a national perspective, and when they're looking at each capital city, and this is what the media then grabs onto, what you're going to see is property prices are going to go roughly flat. Now, when I say flat, that doesn't mean it's a horizontal line where every month there's 0% price change either up or down, okay? Sometimes you're going to see property prices rise a bit. Other times, next month, for example, you might see them fall slightly. And if you do, expect to see a lot of noise from the property bears saying, I told you, February's data was just an aberration, property prices are going to crash. And then the next month you might see prices start to rise again and do this, right? That's essentially what we call the bottom of the market, right? When property prices are sort of just, going up and down, no clear direction, okay? And so the thing is then, when is this going to break out, okay? And I do believe we're going to then see the next phase of property price growth, all right? It's going to come when we have certainty around what's going on with interest rates, and whenever interest rates do start to drop. Because the fact is that the supply and demand metrics, the fact that demand is so much higher than supply, that is an issue that cannot be fixed in the short term, right? It just can't. So therefore, there is always going to be a floor on property prices as more and more people come into the country, more and more people are sick of renting and now start looking to buy, okay? But once you then see interest rates start to fall, you're going to then see more people feel more confident. They're going to jump into the market and they're going to start buying. So what does that mean for you then as a property investor? It means that now could be a great time for you to enter the market, because there is still some uncertainty out there and the media is certainly playing up on that. But it also means that there are pockets of the country that are really starting to take off. And will interest rates at some point start to level out and decline? Absolutely. Have a look at this. Westpac predicts long-awaited rate cuts after harder economic times to come. One of the big four banks has explained their new prediction on when interest rates will drop and delivered a warning to RBA boss Phil Lowe. The article then goes on to say that Westpac expects 7 interest rate cuts from early 2024 onwards. Now, I don't know if we're going to see quite that many, but regardless of how many rate cuts, okay, the fact is that we're getting very close to the top of interest rate movements, and then interest rates will be cut. There's a lot of economic fundamentals pointing to the fact that the RBA has probably gone too hard already, and the Commonwealth Bank has come out and said that they expect rate cuts to start from late 2023. So once you start seeing that certainty, once you start seeing certainty that interest rates have hit a peak and they're now either going to stay consistent or start to fall, combined with these supply and demand metrics, you are going to see property prices start to rise quite steeply. But for now, I would say that the property market is resetting itself. We are at a reset point here. The median price point is essentially going to stay flat nationwide, but that means that for the smart investors, there's a great opportunity to find markets that are starting their next growth phase, about to start their next growth phase, and take advantage of them before everyone else does. I really believe that 2023 is a great buying opportunity. I know I'm personally buying, and I hope you look at the opportunities that are available to you too. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier: How to Build a Property Portfolio That Pays You an Income Each and Every Month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.